So if I had to, quote, do it all over again and get started with real estate, in my mind, what I would do, what I counsel lots of people to do, which is to buy their first home, not as a single, family home, a traditional home that they would think about, but as a 2, 3, or 4 unit. Explain to us, Carl, how that would look to a buyer from the borrowing perspective.
Mm-hmm. Well, there's a few options for buying a second or a primary residence with a 2 to 4 unit. So the easiest path to do that would be via an FHA loan. FHA loan only requires 3.5% for your down payment. You can use the potential income from the other units towards your qualifying income to help you qualify with a 25% vacancy rate. But you can use almost the whole rent from each unit to qualify. So you have a low down payment option. Your income that you'll produce from the other units will essentially pay for your mortgage. So it's a very attractive option.
So as Ryan, who's helping us here put all of our information together, has called it, it's a, quote, house hack, unquote. It's a way to get into the housing market and start by having your tenants subsidize your mortgage payment, or if it's a large enough number of units, 3 or 4 units, they'll pay your mortgage and basically you live for free.
Yeah, yep, exactly. So I kind of drove a little scenario here with a $250,000 purchase, 3.5% down, interest rate say of about 5.875, $4,500 in taxes and about $1,000 in homeowners insurance, give or take. So in that scenario, if you were to get $1,000 from each unit, you'd be left with an $80 a month expense for your unit. Yeah, 3-unit house, the other 2 units just at $1,000 a month would pay your mortgage.
That's amazing.
Yeah.
That's amazing. Yeah. So for the cost of $80 a month, you have your own place plus the property.
Yep.
Now, interestingly, if you come in as an owner-occupant, which is the way that you would be doing this, Fannie Mae and Freddie Mac, who underwrite the mortgages, are viewing a 2, 3, or 4 unit just the same as a single family home for financing purposes. For
the most part, yes. The down payment requirements are more stringent with a conventional loan on it. So with Fannie Mae, they require 25% down on a multi-unit. Freddie Mac, 20% down.
But FHA only 3.5%.
FHA only 3.5%. So in most cases, I mean, unless you really want to bring a lot of money to the table, FHA would be the way to go. Start out, especially.
So I'm a buyer, I'm getting started, I buy this. How long do I have to stay in the property myself before I can vacate it and turn it into a pure investment property?
So, I mean, you're getting the mortgage as owner-occupied, so technically you should be staying in it long-term, but a year is pretty much the benchmark. Okay. So after a year, circumstances change, but typically a year is the minimum that you have to be in there. Okay. Then you could always, at that point, look to refinance or take an equity loan to get some of the equity out of the property to help buy your next house.
Or next multi-unit property.
Or next multi-unit, but yes.
No, I appreciate that because that's a way that I would have often thought that I would get started. When I came back from overseas and came back to the area and such, I bought my first home to the traditional way and such. But if I had to do it all over again, I would love to have started out by owning my property for absolutely, $80 you said a month?
Yep.
That's unbelievable. At only $80 a month, I can own my own place.
Yeah, I mean, the most part, it's almost like you have your own apartment, but you own it, So the multi-units might be a little bit smaller than your single-family residence, but at a younger age like that, I mean, that's kind of all you need. You're just starting out, and it's a great way to get into the real estate market.
That's fantastic. Well, Carl, I appreciate your insights on that. Well, thanks for your insight today, Carl.
Thank you.